Hello and welcome to Contact Payroll Online Training. I'm Rupert. In this chapter, I will be introducing the transaction master file. So first of all, I'm going to open up my payroll program from the desktop, log in with my default username and password. We don't want to read the message at this point. And to get to the transaction master file, you click on Edit, Organization, Master Files, Transaction. There you'll see you've got 5 tabs on top, which is Payments, Deductions, Contributions, Benefits, and Predefined Sets. I'm going to briefly explain each of those tabs on top, and then the function for the transactions contained in each of those sections. So on the payments, we've got all our payment transactions like hourly remuneration, other remuneration, our overtime. So those are all the payments that we actually pay out to an employee. Under deductions, we've got all our deduction transactions, which is funeral policy, garnishee orders, provident fund. We've even got a staff loan reducing balance option where you can put in a balance and every month it will take off a specific amount from that balance until the balance is 0. You can even link periods that it should be deducting specific to that transaction. So for instance, if you specify 12 periods, it will take off the same amount for 12 periods and then it will stop. So you can either use the balance option or the period option. Then we've got the contributions tab. Those are the company contributions. The benefits, which is use of company vehicle, also part of our medical aid transaction set is part of the benefits. And then we've got predefined sets. Now, in the next video, I will actually go deeper into each of these transaction sets. But what a set is, it is basically a couple of transactions, which could be a payment, a deduction, a contribution, a benefit. All of those form part of one set. And that is specifically important when it comes to, for instance, medical aid transactions. Because on the medical aid, we've got a predefined set. If you look here under the code column of APMA, and if I add APMA to an employee, the payroll automatically knows that it should add the APM4 transaction, which is the deduction, the contributions, which is the APM1, and then the benefit, which is APM3. But I am going to go deeper into that in the next discussion. So then just to briefly explain what all the transactions are in these different categories. Under payments, we've got hourly remuneration. So that will specifically pertain to your guys working on an hourly basis. So you will use that transaction if you would like to pay an employee, say for example, for 10 hours or 20 or 30 hours for a specific period, let's say a week, period cycle, let's say a week, fortnightly or monthly. And then we've got our monthly remuneration, which we actually pay to our employees on a monthly basis. And then we've got other remuneration for whatever, say commission or any of that. You can use the other remuneration. And then we've got our overtime rates, which is 1.3, 1.5 and double time. So depending on whether the employee worked on a public holiday or whether you work on a Saturday or you just work normal overtime, then you'll use that specific overtime transaction. And then you've got the annual payment bonuses, the annual payment bonus incentives. There you've actually got a commission based on sales or turnover. You've got a transaction for that, and you've got computer allowance, you've got leave pay on resignation. So these are all your payment transactions, and you can go through the list and look at each of them. I am going to go into one of these transactions just to give you a quick overview. If you look at the monthly remuneration, if we go into it, it says this transaction is a default payment transaction. So what that actually means, it was installed with the payroll. So you can create later on, as soon as you get familiar with the payroll, you can set up your own transactions. So if we go into the monthly remuneration transaction, you will see that firstly it's got the code, then it's got the description of that transaction. It is indicated type as payment. And if you look under preferences, you've got the option for hours or amount. Of course, this is an amount. It's not hours because it's monthly. You've got your IP5 code to which it is linked under IP5. So when we import into EasyFile, it actually uses that code. You've got your EA leave pay calculations. So here you could say use the standard rules for EA remuneration or the average rules or excluded from my EA remuneration. I will also discuss the EA remuneration calculation in the next video. Then you've got minimum value, you've got minimum units, you've got maximum units, you've got a transaction code overflow. That means that if it reached the maximum units, it will automatically put the difference into that transaction overflow. Then you've got the annual interest rate. If you would like to add interest on the specific transaction, and then under selection is all our legislative selections. So you could say this transaction should be applicable for OID, UIF, pay as you earn, RSC, SDL. Also, you could indicate here what it will affect. It will affect my gross earnings on IP5. It will affect my net pay on my payslip. So this is quite an interesting one, which I would like to mention at this point. Say, for instance, I'm just going to go back to the list. Say, for instance, we're working with monthly remuneration. So that is the salary that you pay an employee monthly. And you would take this tick off. What effect would that actually have, not having the net pay tick on? Basically, having the net pay tick on, that it actually means that the employee's salary will increase with this amount. So if you would give an employee a monthly salary, let's say of 10,000 Rand, that by putting that tick on will increase his salary with 10,000 Rand. By taking the tick off, his salary will not increase with 10,000 Rand. So you may ask, but then what is the point? What is the point of having net pay enabled if he doesn't increase his salary? What it basically entails then is, if we have a transaction of 10,000 Rand for an employee and the net pay is not on, he will still be taxed on the 10,000 Rand. The 10,000 Rand will still be showing on his payslip. It will still be as part of his salary, but it will not add to his net salary. In other words, the amount that you're going to pay out to him will not include the 10,000 Rand. And that is very handy in some cases where we would like to pay an employee a commission or a specific transaction, and that should actually go into almost like a savings plan, but it should not be paid out to the employee in his salary. So that is where you will use that. And then we've got just here below, we've got print on payslip, print year to date on payslip, which is just the year to date transaction value for the year. So say we in the 6th month of the year, it will actually add up 6 months of this specific transaction and give that total on the payslip. So that is just a brief overview of how your transactions look like. I would advise you not to change any settings on the default transactions, as it is default payroll transactions. It's been set up with the correct codes, with the correct parameters. So you may by all means go into those transactions, look at the settings and how it's been set up, but preferably, if you're not familiar with the setup of transactions, rather don't change any settings. Then, of course, as I've explained, the deductions works exactly the same as the payments, except for that it deducts from the employee salary. So, for instance, if the employee had a staff advance and you would post 1,000 Rand to staff advance, it would actually then reduce his salary with 1,000 Rand, subject to the net pay being enabled, as I've explained on the previous transaction. Then under contributions, exactly the same. This is the employer contributions. Normally the net pay will be disabled for these transactions because it is only there, and you will see that contributions by default hasn't got net pay enabled. So why do we have contributions? These actually affect our taxable remuneration, so you get taxed on those transactions, but you don't physically get paid. And I'm going to use an example, like for instance the employer UIF. The employer pays UIF on behalf of the employee, but it does not get added onto the salary because the employee doesn't get that money. It actually goes to the unemployment fund. So we actually giving it is a contribution, but we don't add it to his salary. So in that case, the net pay tick will be off. We won't add it into the employee's net salary. So I think that explains that part. Then under benefits, you've got the use of company vehicle, and you've got also got this APM3, which forms part of the set APMA transaction set, which is medical aid, which I'll also explain later on. So that is just briefly looking at the transaction master file. Just to show you again, to get there, you're going to edit, organization, setup, master files, transaction. You've got payments, deductions, contributions, benefit, predefined sets. Look through these transactions, look at the parameters, see how they've been configured. You are welcome to create your own transactions as soon as you're comfortable and you are up to date of how these transactions affect the employee salaries. Thank you for watching. This was the transaction file master.